Well, this week was massive in terms of block deals in the stock market, and looks like it's only the PE investors and the promoters who are laughing their way to the bank. 20,000 crores is what we saw the block deal data for this week itself. The promoters and PEs have sold stake worth 20,000 crores. I'll start with this week, today's large block deals. The first large block was Ambuja Cements. 2.8% equity got sold today by promoters, and they've raised close to 4,250 crores. Tata Technologies did a block deal happen in the afternoon trade. Another 2.5% equity got changed hands there. A clean out trade there was deal worth 1,000 crores. Nykaa saw another large block of 1.4% equity, a deal worth 800 crores, and GMR Airports also saw a large block of nearly 1% equity, deal worth 500 crores. So this was today's large block deals which happened in the market today. Similar was the case yesterday as well. Some large blocks happened in yesterday's trade. The biggest one was Kalyan Jewellers. 6.5% equity got changed hands. It was a clean out trade from PE investor. Wabok sold out completely, and that was worth close to 3,500 crores. The other large block deal was PNB Housing. In fact, PNB Housing saw two block deals in 2 days. Yesterday we saw 3% equity got changing hands. Asia Opportunities Fund sold, and that was worth close to 1,000 odd crores. The other big deals were Eris Life saw a large block, nearly 7% equity got changing hands. Close to 1,200 crores of deal size was there as well. And so was Elkem Labs. The promoter sold close to 0.7%, and they raised close to 500 crores. So these were yesterday's large blocks. But as I said, PNB saw two large blocks this week. Even Wednesday, there was a large block, 5% equity got changed hands. General Atlantic sold, and they've raised close to 1,100 crores. And there was a large block in Zomato as well, where Ant Investment, they sold a large chunk and raised close to 5,400 crores. So, as I said, this week was large in terms of, large promoters and PEs selling stake, and they've raised close to 20,000 crores in 1 week itself. But as I understand, there's going to be more large blocks which are going to come in the days and months, in the days and weeks to come. So, looks like it's going to be an exciting week. Mir, what's your take? I saw your tweet as well. Despite so much of FI and DI buying, the markets have been not moved, but it's largely going to be absorbed by these kind of blocks, right? Generally, how would you read the promoters and PE selling out?
See, at a price, there is going to be selling, whether it's promoters or PE or VC, doesn't matter. There will be selling, and it's a natural process of the market. However, in the last week or so, as you rightly pointed out, there has been an accelerated amount of selling, which probably means that promoters are getting a little, concerned about valuations, and then they think it's a good time to sell a little more, maybe buy a house or whatever,
So if you've been in the market for almost 3 decades now, generally who turns out to be right? The promoter who sells or the new investor who buys out?
see, small selling is fine. Yeah. That's the normal amount of selling that promoters do. Yeah. But when you see concentrated selling, that may be a little, concerning, and time to be a little cautious, I would say. In the past, we never had PE funds selling in such a big way because we didn't have PE funds, right? Say 10, 20 years ago. But the quantity of inventory out there with the PE funds is huge. Yeah. So that is something that we need to be more cautious about. I would worry less about the promoters than the PE funds.
Okay, and PE funds obviously will sell irrespective. Promoters can at least hold on for a longer time. PE funds have their cycles, etc. It also is telling of a market which is fairly buoyant on both the demand and the supply side. Not either way. In a situation like this where promoters are selling, you're saying it's time to be cautious. How do you protect your capital? What do you do for you to stay above the water when everyone else is perhaps, drowning?
See, the first thing I would do is, never do is go down the quality curve.
Okay.
Because usually the lower quality stocks always optically appear cheaper. And there's a good amount of temptation to buy cheap stocks, so to say, but that never works in the long term, And the second thing, especially in these markets, is to look at cash flows very closely. People, it's fine in a normal market, you kind of ignore cash flows and all, it's fine because you're not really going down the cap curve. But as you go down the cap curve, as you go into a little less known company, I think the last 5-6 years of cash flows, working capital, fixed asset, those are the red flags, one needs to look at. There are companies, which have a very unbelievably low gross block, but suddenly have a lot of turnover. Yeah.
Mir, a word on the telecom. We saw a couple of reports today. Reliance AGM is going to be a key trigger to watch out. A couple of brokerages have raised the Jio's EPS estimates and numbers and all. Largely on the telecom side, what's your view? Is this a good consumption play?
It is actually, and probably the worst is over for the sector. And for the first time this year, we saw pricing hikes being taken by the leading companies. So, in my view, telecom will be a moderate growth, moderate return kind of a situation. Probably little better than FMCG, the large FMCG which are really into single-digit kind of growth. Telecom may be a little better than that, but it may not be as high as say the financials, or so it's kind of somewhere in the middle.
What about aviation? Because you're talking about telecom, a lot of people believe that maybe aviation as well, the worst is behind the sector right now. Going forward, the consolidation of power has happened with Interglobe Aviation, but there is at the same time the overhang of some supply coming in as well. How do you look at that one?
So aviation is one sector which I traditionally have been unable to put my head around.
Okay.
And it's always been a sector where I think there's too much monitoring to be done in terms of on one side you have the competition, of course, and the fuel prices. On the other side, you also have regulatory issues all coming up. So for me, it's always been a bit of a complicated sector. It's too much to monitor. So I have not really been,
You'd rather fly than...
Yeah, I'd rather fly.
You said you're buying a pharmaceutical name, Select Pharma names.
Yes.
Elaborate a little bit more.
So again, this is another sector where probably the worst is over in terms of
And earnings have been strong.
The earnings have been strong, and pharma is such an interesting sector because you get a lot of different plays. If you want a domestic play, you can get it. If you want an API play, you can get it. If you are an R&D play, you can get it. So there's a lot of choice in the pharma sector, depending on the comfort level. So we kind of mix and match and build a portfolio around that. Especially with a lot of other segments which were earlier our favorite segments having gone up so much, this seems to be a relatively better safe haven.
The entire PSU basket has seen some bit of correction now from the peak. A lot of stocks are down 15, 20, 30, 40% as well. And even the numbers have been quite mixed in the PSU basket. I actually reported last week, some of the companies have reported 1,000 basis points of EBITDA miss, those kind of numbers as well. Within the PSU basket, what's your take? Anything which is now turning attractive after the recent correction, and you feel like the numbers could come better going forward?
So in PSU, of course, it's a whole gamut of baskets from coal
defense
companies
or whatever, defense or
but our favorites or our exposure used to be in the defense space, and a little bit on the PSU banks space. So I don't think there's too much wrong going on the PSU bank space, and valuation's still okay, and stocks have corrected, so I think that looks fine. On the defense space also, while we did book a little bit of profit there, so we used to have a lot of exposure. Now we almost trimmed it down to less than half of what we used to have. But the stocks have corrected 20-30%, and I don't think the bigger picture has changed. Okay. So it's, I think, just a deferment of orders or a little bit of delay of the orders getting rolled out. But the big picture, if you have 3 or 5 or 10-year picture, has not changed. I'm still bullish on the sector.
Mihir, you said that it's time to be choosy and not cautious in the markets.
Yes.
Right, for a retail investor who invests via the SIP route, they want to go via the mutual fund. Which is the best? What's the best way? Should one be buying in, say, in a Nifty ETF or one of those equal weight, indices for the Nifty or the mid-cap index? Would you go down the sectoral curve? What would you recommend by way of purchase via an SIP route? But if you want to pick, a mutual fund.
So that would depend on your level of sophistication. So if you're just starting out in your journey of investing, probably you start with a flexi cap fund. But as you get more sophisticated...
But keeping the investing landscape right now in mind, the lofty valuations and where we are.
So if I look at pure valuations, I would say it's a barbell.
Yeah.
On one hand, the large caps are looking reasonably priced, but growth is not that great. But valuations have now come to reasonable levels. So that's the Nifty 50 basket for you, probably, maybe Nifty 100. On the other hand, I think the small cap space still offers a lot of exciting possibilities. And if you look at the aggregate valuations of the small cap index, it's at Nifty levels, at the large cap level. So given the growth adjusted equation, I would still say there's a lot more stock picking opportunity in the small cap. Is the middle 150 stock, which is the mid cap, which is standing out in terms of expensive valuation. So that's, in my view, the expensive part of the market.
Right.
Okay.
No, just your weekend plan. What's that?
Weekend plan, I think, is to relax after so much activity.
All right, guys, this has been a great show. Thank you very much, Mihir, for coming down to our studio.
Always a pleasure.
For our newsroom.
Thank you.
Well, with that, it's a wrap on this edition of Editors Roundtable from the entire team. Thank you for watching. You enjoy your weekend.